Mic check. Okay, so here we go. Seek and destroy. We haven't done this one in a while, man. Jeez. Caught me a little bit off guard, but all the markings are there. So we'll start off on the 5 minute, go down to the 1 minute for the entries. Trigger points are London, swiping above and below Asia. Then New York, swiping above and below London. Now, in the makings, this was a perfect setup for London continuation bullish, where price drew into a level. This is the half standard deviation level to pull back into the range. And the target was simple. Drawn liquidity is up here, which is Monday's low, and potentially into this fair value gap that hadn't been tested yet. So price makes that retest. There's a deep retest into this order block here. Then pulls all the way back out, wicking the inversion fair value gap. Inversion because price makes this low, clears the low, and then retests it. You can see that this wick was teasing price to go higher before we completely ran down. And when we closed below the midpoint of London, we had a quick retest. We tried to reject off of London's low. We broke it with consecutive candles, and then we came back up into London's range. This area is where the shift occurs, and we can see that from the nature we're taking internal liquidity but no longer breaking lows, meaning that the sell bias is starting to taper out. And then once we take internal liquidity, we're breaking back into the range. We retest London's low, and then we start to, in the lunch hour, make aggressive pushes higher. This inversion, this fair value gap becomes an inversion, flipping here as price closes above it, retests the top quadrant, breaks above, and then we can see the fight on bearish versus bullish right around this fair value gap that keyed it all off. So we'll go on to the 1 minute. So we're going to focusing in on the New York session. So here's that 5 minute fair value gap. I'm going to change that color to blue. That's the one where price rejects off of, pushes all the way through. You can see the inversion fair value gap here, where price keyed off of. So as we break structure, we retest at 9:30 down to this level. Love seeing a Judah swing for a potential bullish run. Instead, after that price action makes up an aggressive run higher, it gets into that first 5 minute fair value gap after being sloppy. Reaches into it, tries to reject, reaches into it to the 50%, rejects, breaks it, hits this 1 minute fair value gap, and then you'll notice as it closes outside of it, it just starts to run. So when price has this kind of tendency to not retest levels cleanly, meaning not giving a clean close below the fair value gap and then retest it, something's up. Something is moving aggressively that is going to shape up a trade later. So as price does this aggressive run down, you see we hit the high of London, we close below it, retest, we reach the midpoint of London, close below it, have 3 retests, we get to that same level that initiated the bullish run, and we have all of this price action flipping the script from bullish to bearish. We aggressively retest London's low, fail, retest it, push all the way down. So this manipulation leg is where we start to formulate our model. So first version of the 2022 model is here. Price ran a previous high pre-market. We have a breakout structure. We retest. That is sloppy as heck, but it is the 2022 model. Fails to go above this high. Just get this out of the way. Fails to go above this high. Then price aggressively runs lower, clearing all of London's high, mid, and low. Gets down to a certain extension. Then we see a shift. Now there is an inversion fair value gap down here, but because this is a bullish sentiment, seek and destroy is still following the narrative from Monday's high logic, meaning Friday should be bullish. Then we're working off of bullish arrays, not inversions of bearish arrays. So it's just clean bullish continuation type of runs. So when we see this market, push back up, the first clue is here. So this fair value gap, bullish fair value gap, gets retested to the midpoint and then has an aggressive push higher. This is the more conservative signal that we have some sort of bullishness back in the market. So we've got this area here acting as the, let's call it, dynamic area of support, I guess. So price pushes up higher. We now reject off London's mid, but this is now setting the stage for a bullish continuation. So what we see is price pushes higher. We have now made a structural shift here. So we pin that high. Price retraces down into this area here where we had that consolidation, and it leaves a level of internal liquidity. Because we're fighting down in discount, where price could still be bearish, right? So general rule of thumb, if we're below London's low, we're bearish. If we're above London's high, we're bullish. We can have retests all the way down into midpoints and still be bullish. We can have retests all the way up to London's highs and still be bearish. However, once we break above one or the other, then the sentiment would be bearish and respectively bullish. So in a seek and destroy model, you're looking at that area below London's range low, and you're looking for markers where price is going to confirm bullishness. So in this case, we have this aggressive bullish push up. We then make a low below London's range low. You can see the sensitivity around London's low for bearishness. Price starts to break above, going back into this level here. We push lower. We have internal liquidity, internal liquidity, internal liquidity, external liquidity. Price makes a swipe for all of that external for all of that internal liquidity, but fails to take external. And then there's another pop up. And you see when it is making these bullish shifts, it's doing it with aggressiveness. It's doing it with multiple candles in the same direction. We have a retest off the level, but now we're starting to fade away from making new lows. And that is the sentiment where we start to think, well, I've cleared both sides of London. I've had a run up, aggressive run down, and now I'm failing to make new lows despite being below London's low. Something's up. Something's up. Something's up. The market should continue. Now, the larger market profile of a Monday high of the week has it that Friday will draw back into Monday's range, whether to the low or the midpoint. Unlikely, if ever, that it will try and clear London's range high after making a high of the week. But we know that the draw on liquidity is towards Monday's range. So that's this gray line up here. So as we're fighting to make new lows below London's low, we then see the final shift when price takes again internal liquidity and drops into this fair value gap. Bullish sentiment, bullish arrays. So here we see the low on this candle at 24568.5, and then the low on this candle at 24568.25. So it goes a quarter tick below and then starts to move up. And you see, as price fights through the last bearishness that it has, that level and that PD array starts to flip. It breaks it. We have a breakaway gap here. Price is not even retesting it. Any old bullishness becomes levels that we would want to see get retested to spike higher. and then that just runs through during the lunch hour. So typically the AM session will have an AM decline, we'll have a PM rally, and it's a seek and destroy model. So seeing internal liquidity being taken is not a surprise. Now, once we get into the PM, then the sentiment is just all one way bullish, but it's all about where to get in. And so levels to pay attention to are London's high. So we'll extend that out, and then we'll see what a PM session looks like. So here we have the last bits of this journal entry for the PM session. So we clear the London range high here. So these are wicks. The bodies start to break above. We see again taking liquidity, pushing higher, starting to get a little bit cleaner. We reject off of that 5-minute fair value gap that was holding up price previously. PM session kicks off. First presented fair value gap of the PM session after 130s here. We take a dive lower. We reject off London's high. We fight through this area here, but again, bullish arrays, bullish levels, London's range high, bullish fair value gap. This inversion does play a role on this move here, and then we just start to climb higher, and then we fight through this inversion fair value gap. We're in the whispers of the Friday afternoon, so no surprise that price starts to consolidate. We take one more accumulation, manipulation, distribution, move higher. We don't reach that high until Sunday's open, but we can see that the sentiment in the PM after price does all that work below London's low is a bullish run. So that's the seek and destroy model. The first clues are when London starts to break above and below. The second is if you have a great entry or a good read off of a London bullish continuation, but then price breaks that and price is now above and below, then you want to look back and see, did we have this same marker of price going above and below the previous session's range in London to Asia? And if that's the case, above and below London and Asia, and then we just demonstrated above and below London to New York to London, then you're looking for the 2022 model. You're looking for a break of a high, break of a low, market structure shift, leaving a fair value gap. That's what we had here. So we had this break below London's range low. We'll just pop down to the 1 minute one more time. So we had this break below a low. Then we had this market structure shift back up. The first one is here, the most aggressive. The second one is here. And then we start to see price taking internal but not external liquidity, making another shift here, taking a low, market structure shift higher. The fair value gap doesn't get tagged until 12 o'clock going into lunch. And then from lunch into the PM session, all eyes were on the buy side. That got left. We cleared the internal, barely got to the one below Monday's range low, and then on Sunday we popped up higher. So I'm watching this breakaway gap that was formed earlier to see how we kind of fight through that, but we'll let Monday's range play out and not worry about that until we get to Tuesday or Wednesday later this week. Okay, and that's that.